Well, good morning. We just want to welcome you to another discipleship hour. And today you're going to be blessed because Jim Brandt, who owns a company called Mirelle Associates in Elizabethtown, is going to be talking to us about payroll for churches and getting some clarity on some things that we do struggle with at times. And we do get these questions in the conference office. So, Jim, we're so grateful for you and your service to the King. And one thing I know about Jim Brandt is that he not only has a great head for the all things financial, but he has a great heart for ministry through finances, and he understands kingdom things. And so, Jim, thank you so much for being a part of the region and all the assistance you give many of our churches in regard to financial matters for payroll and other items. So, Jim, we're so grateful for you. He also serves as the executive director of the Home Missions Council, the loaning arm for our denomination. So, Jim, thank you for your service to the King. We appreciate it. So this morning, he's going to talk to us about some payroll things. And if you have any questions that you would like to ask Jim, we'll get to those at the end. Put those in the Q&A section on your screen, and we'll talk about those later. And we just want to welcome you. So let's have a moment of prayer for Jim as he leads us this morning. Father God, we thank you. We praise you for who you are. We praise you for your goodness but mostly we praise you for your Son, for the ultimate sacrifice for us that we can be with you in relationship. So Father, I pray for Jim now as he leads us. I ask that you would give him clarity of thought and speech and help him to be able to communicate to the region some of these vital things for doing things properly in regard to payroll issues for our churches. So bless him for his time, bless his family, continue to protect them, keep them safe. And we thank you for Jim Brandt. In Jesus' name, amen. Jim, it's all yours.
Well, thank you, Colleen. Thank you, everybody that's with us this morning. We're getting started right on time here, about 9 o'clock. We'll get into this, and we should have you be wrapped up and have you out of here in time for lunch. So we'll get into this. Not really. It should be about 35 minutes, 35 or 40 minutes, and then we'll have some time for questions. So the subject today is payroll and churches. Get some clarity and review some regulations. I was telling my daughter last week that I was doing this, and she said, "Oh, Dad, that's going to be so boring." I said, "What do you mean?" I said, "It's payroll. It's never boring." But she insisted. She said, "You have to put some comedy into it, or have some levity." So I did find a cartoon, courtesy of American Payroll Association, in their Paytech magazine. There's a lady that's just pulling some baked goods out of the oven, and she's so happy to get her mind off work and doing more than baking. And then Dad and Junior walk in, and they have the question, would these happen to be payrolls? So Junior liked that, so he's in training. So with that thought, we'll move forward to some more serious stuff. We're going to talk quite a lot today about classification of workers, whether an employee whether a worker is an employee or a subcontractor. This is it's becoming more and more a hot topic. It's the one area that we see probably the most non-compliance. It's the area where everybody wants to say, "Well, we're just making a subcontractor write a check." That way we don't have to do payroll. That way we don't have workers' comp. There are a lot of reasons, mostly unjustified, to try to make somebody a subcontractor, just write them a check. But the one thing I would remind us all is that paying your workers is part of the ministry. Whether it's the church or non-church entity, it's all about ministry, and taking care of your employees is an important part of that ministry. So classification of workers. We're going to talk about salaries, wages, and taxation. We'll look at cash housing allowance and how it's taxed. We'll look at parsonage allowance or in-kind housing and taxation. We'll look at other taxable income. We'll look at auto mileage reimbursement, look at a little bit on documentation requirement and retention, and just a reminder to use the resources available to you, and we'll have a time for questions. So getting into the classification of workers, there are 3 common law rules, which those are facts that provide evidence of the degree of control and independence. There's 3 categories of that: behavioral, Does the church or the employer have the right to control what the worker does and how the job is done? Those are the two keys there. What is done and how it's done. Financial aspect. Are there expenses that are reimbursed or not reimbursed to the worker? How the worker is paid? Things like that. Are there tools that the worker has to supply himself and bring to the job? And then type of relationship. Is it an ongoing relationship? Is it a long-term? Is it short-term? Are there benefits involved with pension, insurance, things like that? Those are the three common law rules that we'll work out, that we'll look at. The behavior control. The business cannot control in any direct way what work is accomplished and how the work is done. If there's requirements. One of the things that I would think of with the church, must the pastor use the Bible? Can he preach from the Book of Mormon? Can he preach from the Quran? Well, probably not. At least I think that most of our churches of God would want them to be preaching from the Bible. So there are things like that, the control, the behavioral control. Then the financial control. You can't say you have to spend money on this or spend money on that. Whoops, sorry, went the wrong way there. The extent to which the worker has unreimbursed business expenses. The extent of the worker's investment. One of the things that I'll refer to a number of times in here is with landscaping and lawn care. It's something I'm quite familiar with, and it provides a real good example that we can all relate to. If you have somebody that's mowing the lawn at the church, and they're using the church's lawnmower, and they're doing it when they're told to, it's probably an employee. If it's a guy that has a truck and a trailer and a lawnmower and a string trimmer and blowers and all that stuff coming in and doing the work for you, probably that person can be classified as a subcontractor. And then right along with that, the extent to which the worker makes his or her service available to the general public. If they hold themselves out, they put advertising out, and they make the service available to the public. And then how the business pays the worker. The extent to which the worker can make a profit or loss. That goes back to, that ties into how the worker gets paid. One of the other things I will add there with how the business pays the worker, you should always be sure to have a legitimate invoice from the contractor. It shouldn't be something that they go to Staples and buy a pack of invoices and just scribble something up without a letterhead. When you get into, the church isn't going to get into unemployment audits, but IRS audits would look for the same thing. They're going to want to see a printed bill head, something that really lends to the legitimacy of the business being an actual business. So require a real invoice from the contractor. And then a relationship with the parties, you should have documentation. That includes written contracts. If somebody's, again, going back to the lawn care, they should give you a contract of what they're going to do, how long the contract is for, that type of thing. Whether the business provides worker within benefits such as insurance. You have somebody that you're paying insurance for, you're going to vacation. That's really lending to be or indicative of an employee and not a contractor. The permanency of the relationship, is it a long-term thing? Is it once and done? They come in and do the job and they're done. That would help determine what type of relationship it is. And then the extent to which the services are a key aspect of the regular business. Lawn mowing is probably not going to be a key aspect of the church. However, the pastor would be. Preaching is going to be a key aspect of what the church does. There are 20 questions that the IRS has that they make available. If you go into irs.gov and just put in their search bar 20 questions or subcontract, something like that, you will find that in there. We're not going to look at all of them, but a number of them that are quite pertinent. Again, it's the instructions. If the person for whom the service performed has the right to require compliance with instructions, that would indicate employee status. if the services are rendered personally. Again, the pastor, if you hire a pastor, you're going to expect the pastor to perform the services personally. The lawn care, you may hire a company, the boss comes out, looks at it and gives you an estimate, but he has a crew that comes out and does it. That's, the lawn care is going to be, can probably qualify as subcontractor. Continuing relationship, whether it's ongoing, the set hours of work. If you as the payer, as the hirer, set the hours of work, say that work has to be done such and such a time, that's going to indicate employee status. If it's full time, must the worker devote most of their time to doing this work? Again, the pastor, I know there's some part-time pastors, some bivocational pastors, but going back to lawn care, if they're holding themselves out to the general public, they're going to be there for an hour a week and going other places. That's going to help determine what they are. Whether the work needs to be done on the employer's premises, whether oral or written reports, you must again look at the pastor. I think most councils want some type of a regular report from the pastor. That's going to indicate employee. The lawn care guy, the lawnmower, is probably not going to give you an oral or written report from time to time. They're just going to send you a bill. That would indicate more of a subcontractor. How somebody is paid is a real helpful factor in determining employee or independent contractor status. If somebody's paid by the hour, the week, or the month, it's generally going to point to employment status. If they're paid by the job, we're going to come in and we're going to do this, and it's going to be $200. That leans more towards independent contractor. Whether there are business and traveling expenses paid on part of the worker, whether they're reimbursed, that's going to help determine if you're paying for the pastor to go to conference or to a convention or something like that. That's going to be indicative of employee-employer relationship. If you have with that, you would have the right to control the worker. Who's furnishing tools and material? Again, the lawnmower, they're going to come in, typically going to come in with their own truck, their lawnmower, their tools. That's going to be a subcontractor, an independent contractor. If the church is providing the mower and all the tools to do it, and you have somebody just coming in using those tools, that's going to lean more towards certainly be more of an employee-employer relationship. And then the right to terminate. If the worker has the right to terminate the relationship, they say, "I quit." Then they're free to go. That would indicate more of an employer-employee relationship. When all else fails, if you go through those 20 questions, you can't determine what the status of an employee, of a worker is, you can go to the IRS. Not something I necessarily recommend. I don't necessarily recommend getting into the IRS involved in anything you don't absolutely have to be involved in, but the IRS does have a form. It's the SS-8. It's called the Determination of Worker Status for purposes of determining federal employment and income tax withholding. And that form it's about a 4-page form. It's available, again, irs.gov. You can fill that out and send it in, and the IRS will eventually, it's not a quick turnaround, but they will eventually get back to you with the determination. Some information regarding subcontractors: you should always require Form W-9 to be completed. W-9 asks for the contractor's name the name as it appears on their tax return is what it wants. Their address, their entity classification. It'll ask whether they're a sole proprietor, a partnership, an LLC. If they're an LLC, how they're taxed, and then either their social security number or their employee identification number, and a signature. Along with the W-9, for any contractor that are doing work on your premises, I would strongly recommend getting an insurance certificate. That's insurance certificate is something that is issued by their insurance agent. It's not something that the contractor makes a copy of and sends to you. It's issued to you, the church, or the entity that is hiring the subcontractor. It will indicate their liability insurance and the limits and the expiration, the policy term. It will indicate if they have automobile insurance. Again, going to the lawn mowing guy, I'd encourage you to make sure they have automobile insurance. They're going to be driving onto your parking lot. If they back into the building or back into another car or something, you want to know that they have insurance. And you may also want to check with your insurance agent to see what information they want to see on an insurance certificate. I've heard insurance people speak and say that the insurance certificate should have you as the payor listed as additional insured. Other insurance agents said as long as the insurance is in effect and you're listed as the certificate holder, that is sufficient. With you being listed as the certificate holder, if the insurance is lapsed or is canceled for any reason, you would get notice that the insurance is no longer in effect. In the absence of a W-9 or refuse to provide it, you are required. It's not optional. It's not optional. You're required to withhold backup withholding. Backup withholding for 2020 is 24%. So if somebody does a $1,000 job for you and they won't give you a W-9, you're required to withhold $240 and remit that to the IRS. Again, it's always good to get the W-9 sooner rather than later, because if you wait until the job's done, then the only tool you have to require that is to not pay them. That's not going to be not going to lend itself to having a good relationship. If you deduct 24% from them, that's going to make it even worse. So the sooner you get the W-9, get it addressed up front, get the insurance certificate addressed up front. They do the job, send you the bill, you give them a check, and everybody's happy. New for 2020, there's a Form 1099 NEC. It's a non-employee compensation. This replaces Form 1099 MISC, where Box 7 on 1099 MISC was used in past years. Box 7 on 1099 MISC for 2020 is a checkbox for some information. You cannot use this you cannot use the MISC for non-employee compensation in 2020, and I'm sure going forward. The 1099 NEC is only for non-employee compensation. If there's rent paid to someone, that still goes on the 1099 MISC, and everything else that was on the MISC previously is still on the MISC form. Each subcontractor must be issued a 1099 NEC if all these conditions are met. If they are an unincorporated entity, meaning an individual, sole proprietor partnership, an LLC taxed as a partnership. This is where it's real important to have the W-9, because that's where they're going to tell you what form their entity is, how the entity is taxed. And if it's an LLC, it will ask them how they are taxed. And then all attorneys, whether the attorney is PC, professional corporation, or INC, incorporated, it doesn't matter. All attorneys get a 1099. Again, all these conditions have to be met. If they provide a service, of course, an attorney is going to be providing a service. If there is a situation where somebody's providing a service and it involves parts or supplies along with it, again, the lawn mowing people, the landscaping people, if they come in and mulch around the church, they charge you $1,000 to do the labor, and they charge you $600 for the mulch they use. They plant a tree, they charge you for the tree, maybe plant some flowers. The entire amount paid to them is included on the 1099 NEC. You do not pull the labor out and report only the labor. The entire amount paid to the entity gets reported on the 1099 NEC. And if they're paid $600 or more in a calendar year. So those three conditions all have to be met. They're unincorporated, they provided a service, and they were paid $600 or more in a calendar year. $600 counts. $599.99 does not. $600 qualifies for a 1099 NEC in 2020. If all these conditions are met, Form NEC for each subcontractor must be sent to the subcontractor no later than January 31st of the following year. It must be sent to the IRS by January 31st of the following year. That recently changed. That changed in the past couple of years. It used to be that they weren't due to the IRS until February 28th. And if you were filing electronically, it was March 31st. That's no longer the case. They must all be sent to the IRS by January 31st. Pennsylvania Department of Revenue, for monies paid to a Pennsylvania contractor, the 1099 NEC must be submitted to the Pennsylvania Department of Revenue by January 1st of the following year. Maryland requires the 1099 NEC only if there's Maryland withholding. New York does not require filing a 1099 NEC, and Virginia requires the 1099 NEC only if there is Virginia withholding. One other note that confuses it a little bit more: if there's an out-of-state contractor that provides a service to you and you pay them $5,000 or more in a calendar year, you're required to withhold 3.07% personal income tax and submit that to Pennsylvania Department of Revenue. That is applicable only to individuals and single-member LLC contractors. Individuals and single-member LLC contractors that are from outside of Pennsylvania. Now, the question I'm sure everybody's waiting to argue, I guess, is the pastor an employee or a subcontractor? There are two things we're going to look at. We're going to look at Internal Revenue Service, topic 417, titled Earnings for Clergy, and the Internal Revenue Service, publication 15A. I'm not a fan of reading. When we do slides like this, there are a couple things, though, that I think are worth reading. This is one of them. A licensed, commissioned, or ordained minister is generally the common law employee of the church, denomination, sect, or organization that employs him or her to provide ministerial services. However, there are some exceptions, such as traveling evangelists who are independent contractors or self-employed under the common law. As a minister performing ministerial services, or sometimes referred to as sacerdotal duties, all earnings, including wages, offerings, and fees, received for performing marriages, baptisms, funerals, etc., are subject to income tax, whether the amount is earned as an employee or self-employed person. However, the treatment of expenses related to those earnings differs if the income is earned as an employee or as a self-employed person. That really addresses the taxation of the money, but it's important as we discuss and determine if the pastor is an employee or a subcontractor. Publication 15A, this you need to really think about and understand what we're reading here. Ministers are employees if they perform service in the exercise of ministry and are subject to your will and control. That pretty much sums it up. There will be a few exceptions we'll talk about, but it goes on here then to say the earnings of a minister are not subject to federal income, Social Security, and Medicare tax withholding. I stress that they're not subject to withholding. However, if the minister is a common law employee, the earnings as reported on his or her Form 1040 or 1040 SR are subject to self-employment tax and federal income tax. So what that's saying is they're not subject to withholding, but they are subject to those taxes. You don't withhold these taxes from wages earned by a minister, but if the minister is your employee, you may agree to withhold the taxes to cover the liability for self-employment and federal income tax. We certainly, we at Mirelle certainly encourage that. I think I speak to conference, we encourage withholding those taxes. Again, it's part of the ministry. It's the ministry that we have to the pastor, ministry have to our employees to do things like that, to withhold the tax and submit it. Then the pastor is not charged, is not required to make quarterly estimate payments. They don't have a big tax bill. Hopefully, if it's done right, they do not have a big tax bill the following April. We're going to look at some salaries, wages, and taxation now. What is taxable, and which taxes apply to which earnings? So any regular wages, this is regular with salary. This is if you pay a FICA allowance, which many of us do. We're not talking about housing allowance right now. Any regular wages paid to licensed and ordained clergy employees are subject to the following. They're subject to federal income tax. Withholding, again, is not required, but we encourage it, along with the amount to cover the self-employment tax. The state income tax, withholding is not required, but it is encouraged. Local income tax, this is required. Pennsylvania Act 32 of 2008 requires the earned income tax to be withheld from your employee. Local services tax. In some jurisdictions in Pennsylvania, withholding is applicable. Some jurisdictions provide a clergy exemption, and this is not county by county, it is municipality by municipality. This is not, it's not mandated by Pennsylvania. Act 32 did require every county to have one tax collector. Consequently, we have 67 tax collectors in Pennsylvania. Lancaster County uses Lancaster County Tax Collection Bureau. Dauphin County uses Keystone Collection Group. Cumberland County uses West Shore Tax Bureau. They sometimes do, but sometimes do not collect the LST. Lancaster County is a good example. Lancaster County Tax Collection Bureau, LCTCB, collects the earned income tax for all municipalities in Pennsylvania, but they do not collect the LST for Mountainville Borough. They do not collect the LST for the township up in northern Lancaster County. They do not collect the LST. And I know the municipality in northern Lancaster County does not exempt pastors. Lancaster County Tax Collection Bureau does exempt pastors. There is a clergy exemption, but some municipalities do not exempt clergy. The other thing to keep in mind, there is a mandatory low income exemption. If a municipality levies an LST rate that is more than $10, they must exempt taxpayers who earn less than $12,000 in any one subdivision. That's not earning less than $12,000 for the year everywhere. If they earn less than $12,000 in one subdivision, in one municipality, they are exempt from the LST if the LST rate is greater than $10. There are a few that still charge only the $10. Also, if the LST rate is greater than $10, you're required to deduct it incrementally throughout the year or throughout the time that the person is in your employ. Meaning that if it's $52, which we see a lot, it's deducted, if they're paid weekly, it's deducted $1 a week. Bi-weekly, of course, would be $2. There are also a few exceptions, Harrisburg City being one of them. Harrisburg City got the designation of distressed municipality, something like that, and they were allowed to increase the LST by 3 times. So if you work in the city of Harrisburg and you're subject to the LST, your LST rate is $156 for each year. In addition, clergy being classified as self-employed purposes, what am I saying there? Yeah, they're required to pay self-employment tax on their regular wages. And again, you do not deduct Social Security and Medicare tax from clergy. The W-2 for a pastor should have an amount in box 1, typically. Probably box 2 if you withheld any federal income tax. Boxes 3, 4, 5, and 6 should be blank for a pastor. Cash, now we're going to talk about cash housing allowance. we're talking about cash housing, then we're going to talk about parsonage allowance. The cash housing allowance paid to a pastor, they enjoy some exclusions from taxability. The amount, these are the rules for it. The amount must be designated by the church council, by the governing body, in advance of the first payment being made for the cash housing allowance. I'd certainly encourage you at budget time, you're doing your budget in November, getting it approved in December, that's the time to designate this cash housing allowance to be paid to the pastor. You can't get to January or February and say, well, we're going to make it, as of the first year. That's not permitted. It has to be designated prior to the first payment being made. Cannot be made retroactively. The amount designated cannot exceed the lesser of the following amounts. There are three amounts here. Certainly the easy one to follow is the amount officially designated in advance as a housing allowance. Council says the housing allowance is going to be $20,000. It, of course, can't exceed that. It cannot exceed the amount that's actually used to provide or rent a home. And this is pretty broad. My understanding, I'm not the tax guy, I'm the payroll guy, I'm not the tax guy, but my understanding from this, working with CPAs, is that this housing allowance amount includes all costs and expenses involved with providing and maintaining a home. If the pastor wants to track it that closely, even down to paper towels and cleaning supplies, can be included in the amount that's actually used to provide the home and maintain the home. That's the second option. And then the third one is quite interesting. The fair market rental value of the home, including the furnishings and the utilities. If you want to take the time to look at this at some point, call a real estate agent and ask them what the rental value of a home is, including the garage. And then you could go to some place like Aaron's or a home furnishings rental place like that and price out the furnishings. Take a little bit of time. I worked on this a little bit at one time several years ago, and this could be a big number, could be a real big number. Again, it includes utilities and everything like that. So it cannot exceed the lesser of those three amounts. Encourage you, make it fair. The great saying, bulls make money, bears make money, and pigs get slaughtered. Don't be a pig about it. Don't overdo it. You want to go back to scripture, give to God what is God, and to Caesar's what is Caesar's. So pay what's fair for taxes, but certainly if it's not subject to tax, don't pay it. And then the cash housing allowance amounts are subject to the following taxes. They're subject to self-employment tax. In Pennsylvania only, they are subject to state withholding tax, 3.07% personal income tax on the housing allowance. Maryland and most other states follow the feds, and they do not tax cash housing allowance. Cash housing allowance is exempt from state income tax. Cash housing allowance should be reported on in box 14 on the Form W-2 and identified as such. Next, we're going to look at the in-kind housing amount. This is the fair market rental value of a house, a parsonage provided by the congregation. The in-kind housing amounts are treated differently than cash housing. The amount, again, should be designated in advance. You can do the same thing with this, really, and call a real estate agent, call a realtor, and ask what the rental value is. One of the things that you can also consider here is whether the church is paying the utilities. The church is paying utilities, that should really be included in the value of this in-kind housing. The in-kind housing, like cash housing, is not subject to federal income tax. The in-kind housing, unlike the cash housing, is not subject to state income tax in Pennsylvania or other states. The in-kind housing follows the feds for local income tax, and is not subject to local earned income tax. The in-kind housing amounts are subject to self-employment tax, and like the cash housing, they should be reported in box 14 on Form W-2 and identified as such. They should be separate from cash housing allowance amounts because of the taxability, the different taxability for each. If you look at a Form W-2, you should be able to look at the form and identify how all the amounts are arrived at and what's taxable and what's not taxable. So they should absolutely be listed separately if both are involved. Now we're going to talk about non-clergy employees, your regular employees, your secretary, your sexton, your janitor, your organist, anybody else like that, youth leader if they are not a licensed or ordained minister. They are subject to federal withholding tax, and withholding is required as applicable according to the employee's Form W-4. In 2020, there is a new Form W-4 that must be used. If someone wants to change their withholding status or exemptions, which we don't have anymore, if they want to make any change to withholding, they must use the new Form W-4. It also is available at irs.gov. Go up in the search box and put in W-4, and it will bring up a fillable PDF that you can complete there. The new W-4 is quite different. It asks for five things. It asks for filing status, whether you're single or married, filing separately, whether you're married, filing jointly, or if you're head of household. The second item it asks is whether you have 2 jobs. Number 3 is the number of qualifying children under age 17. Next is the other income, not from jobs. For instance, if you have some 1099 NEC income. And then also, if you want an extra amount withheld or deducted. Those 5 items are all that's on there. Of course, your name and address, things like that. There is a brief worksheet along with about a 4-page document. You can fill that out. There's also a tax withholding estimator available at, again, irs.gov. We love the IRS for all the tools they make available. It takes a little bit of time to go through this tax withholding estimator. Some people find it to be cumbersome. I've gone through it already. I think it's cumbersome. Okay, I'll give you that. But it's a great tool to use, and it will help you get to where you need to be with withholding. You will need your last year's income tax return. You will need your most recent pay stub, and you'll need information on any non-W-2 income that you may have. If you have 1099 income, whether it be MISC or NEC, whether you have dividends and things like that. And it takes probably 10 or 15, 20 minutes to go through, but it will tell you how much money you should have held at the end of the year. You'll tell it when your last pay was, and from that it will tell you how much more you should have withheld through the remaining pays of the year. Again, it's a great tool. It takes a little bit of time, a little bit of patience, but it's a good tool provided by the IRS. Social Security tax for non-clergy employees is required to be withheld. Medicare tax is required to be withheld. State income tax, personal income tax, 3.07 in Pennsylvania is required to be withheld. And local earned income tax, again, is required to be withheld. And we talked about local services tax in some jurisdictions where the low income exemption is not applicable, is required to be withheld. A few years ago, we heard there was a lot of talk, a lot of consternation really about the increase in the minimum salary required for salaried employees, for salaried exempt employees. Now, salaried exempt means that someone's paid a fixed amount and they are exempt from overtime. Doesn't matter how many hours they work. Salaried exempt employees. That amount was going to be like $955, I think. And then at the 11th hour, after everybody's geared up for it and things were kind of settled down, there was a court that struck it down and said you can't do that. So it was back to the drawing board. That was under President Obama. that never got redone under President Obama and his administration, but it was still out there and being looked at. That was changed, I think, in 2019. That got changed. So the salaried employees must still meet the duties test to qualify as salaried exempt. There's a list of duties, a duties test. Somebody that's doing manual labor cannot be salaried. Somebody that's doesn't have, is just an everyday job, and I don't mean to trivialize everyday job because they're more important sometimes than not everyday jobs. But just go to work and factory job, a production line job, something like that they cannot be salaried. They are hourly, and they are subject to, they're entitled to overtime pay if they work more than 40 hours. If the employee qualifies as under the duties test, they have to be paid a minimum of $684 a week, or $35,568 per year. Again, they will be exempt from overtime, assuming they meet the duties test. Back on the other thing, the question get asked, what about part-time? It's not addressed. Part-time people, it doesn't talk about part-time people. The other item you might ask, well, what about, and I've asked that, and I've looked into it, what about a pastor? If a pastor is making $40,000 a year, he's getting $20,000 housing allowance and $20,000 salary. Well, the $20,000 salary as his taxable income is less than the $35,000. This salaried exempt employees falls under FLSA of the Department Wage and Hour Division of Labor Industry, Labor Department. FLSA, pastors are exempt, clergy are exempt from FLSA requirements. So that's not, you don't have an issue with that. Other taxable income. A number of things here that we do from time to time that we'll look at. We're not going to look at in any great depth at all of them, but a number of them that I think we use a lot. Bonuses, Christmas, and other special occasion gifts. This is something we see from time to time. You want to take up a love offering for the pastor, at their anniversary, or for Christmas, things like that. If you do the love offering, take up a love offering and give it to the pastor. If you put it in the bank and write a check, if the church writes the check, it's taxable income. Not advising to try to avoid taxes or create. I don't want to be a criminal, but take up a cash offer and give it to the pastor. Other things: retirement gifts, property purchase, employer sick pay, self-employment tax paid by the church. That's the FICA allowance we spoke about earlier. If you want to pay half the pastor's self-employment tax, because that's what really gets done with non-clergy employees, it's simply taxable income, taxable fringe benefits. Personal use of a church-provided car. I don't think this applies very often, but if the church owns a car that the pastor uses, if they are an employee, commuting miles are not business miles. If they use the car to drive from home to church, from church to home, they're not commuting miles. If they do hospital visit or congregants visit or something like that, they're going to be business miles and not taxable. But if they use it for personal miles, for personal use, that becomes taxable income. Discretionary funds, the pastor has access to the petty cash and takes money out and uses it and doesn't account for it. It's taxable income. Right along with this, non-accountable business expense reimbursements. We cannot say, well, we're just going to give the pastor, we know what the history has been, we're just going to give him $300 per month, and that covers his business expenses. It has to be an accountable plan. The pastor has to anybody, the pastor or other staff, have to turn in receipts. It has to have a relevant business purpose, and they have to be turned in timely. I think it's like 60 days they have to be turned in. You can't be turning receipts in at the end of the year. From a legal standpoint, there are time restraints on that. Employer reimbursement of spouses' travel. If the pastor is going to a conference or a convention somewhere, and it'd be good for him to have his or her spouse along. The cost for that is going to be taxable income. Now, the hotel, it may be a hotel situation where it's $100 for one person, it's $100 for two people. I personally, again, I'm not the tax person, check with the tax preparer, but I don't think you're going to need to split that. Airfare, something like that, is going to be identifiable as the spouse's portion, and that would be taxable income. Forgiveness of debt, severance pay, trips to the Holy Land or Haiti, which we do from time to time. You're going to want to look at this real closely, and again, speak to a tax practitioner. Somebody prepares income taxes. This may or may not be taxable to the pastor. First, payment of personal expenses, and some easy things here: sabbatical, embezzled funds, control of church funds. This is one here that is, people will argue about, but I'm just the messenger, and the legal part of this is if the pastor uses, I keep saying the pastor or staff use the church or employer's credit card for a personal expense, when that transaction is made, that becomes taxable income to the employee. I know functionally what we do is, well, they pulled the wrong credit card out, we'll just deduct it off their pay, they'll just pay it back. I understand that's what we do, but from a technical sense, when that transaction is made, it becomes taxable income to the employee. Auto mileage reimbursement, you can reimburse all employees for business miles under an accountable plan. They must have a mileage log. You can't just say at the end of the month. Again, I'd encourage doing this monthly because there are time constraints on doing this after a certain amount of time. Same as any other expense reimbursement. It must have the date, a relevant business purpose, and the number of miles. You can't at the end of the month just turn in, I had 1,200 miles. That's not an accountable plan. I've heard complaints that, well, I don't want. It's nobody's concern where the pastor's going. Well, it is if you're going to reimburse them for mileage. Now, it can be as simple as visited a congregant or a parishioner. It doesn't have to be we went to see Mr. and Mrs. Brandt because she's beating him all the time and things like that. That does not need to be included in the mileage law. When it was, where it was, and how many miles what it was for, and how many miles were involved. In 2020, the rate for reimbursement is 57.5 cents per mile. Other reimbursable mileage rates are for this year, for medical and moving purposes, it's 17 cents a mile, and the charitable service mileage rate is 14 cents. That does not change. That is set by statute. Consequently, you will not see that change like the 57.5 cents for business miles and 17 cents for medical or moving purposes. Miles can change. Other things to consider. If the assignment for a pastor is for less than 12 months, for an example, with an interim pastor or traveling evangelist, as we refer to, for an interim pastor, the commuting miles can be reimbursed as business miles. Again, if the assignment is for less than 12 months, what we typically do, Eastern Regional Conference with our intentional interim program, I think we typically do 6 to 12 months. So that's something to keep in mind. If you do an 11-month assignment for an interim pastor, those commuting miles can be reimbursed as business miles. Again, it's one of those things where we're part of the ministry. If we can get money to the pastor or an employee as an expense reimbursement, it's better for them. In addition to the mileage, no fuel reimbursement can be paid. And this is for all vehicle operating expenses. It includes their insurance, it includes repairs, things like that. And tolls associated with business travel can be reimbursed in addition to the mileage. Documentation requirements and retention. Form W-4, which is the quarterly employment tax report, is required to be retained for 4 years after the tax is due or paid, whichever is later. Meaning that if you're late on 941 payments and you don't pay them for 2 years until 2 years later, the 4 years starts after that. Form W-4 required to be withheld for 4 years or retained for 4 years. FLSA required documents typically is 3 years. IRS documents, with some exceptions, are usually required to be withheld for 4 years. Form I-9 is a form that you should have on every employee. It indicates their eligibility to work in the United States. It's to be retained for 3 years after their hire date or 1 year after termination, whichever is longer. So we're about wrapped up with that. Are there questions? Colleen, do you have any questions that anybody has put out there we need to address?
There aren't any, Jim.
Yeah.
A couple comments though that I'd like to make. We want to make it clear that it is the pastor's option to do his own taxes, his own federal taxes, and state of Pennsylvania, right, Jim? It is their option. However, we really do strongly encourage our churches to withhold for them. And there is a way to do it. It's complicated. Like Jim said, you can't put things in where it says Social Security and Medicare, but you can withhold all of his obligation or her obligation for the self-employment tax, which actually is the full amount of 15.3%, which covers Social Security and Medicare. But it has to be withheld in a certain way, Jim, and that all goes in box 2, correct, for
Right.
holding.
It all has to be withheld as federal income tax.
Yes.
And remitted it with Form 941 or as a 941 payment.
So essentially, you're over withholding their income tax, but it covers their self-employment tax. Okay, and here's the reason why we really, really strongly encourage our churches to withhold. Early on, when I started to do the treasurer work for the region, we had a pastor that came in, and Jim Moss and I sat down with him in the conference room, and he was in so much IRS debt that he will die with it. And we just really purposed that we felt that that wasn't fair to that pastor, that he was not taken care of in that way. And we don't want that for our pastors. So there's a way to do it. There's a way to do it legally. And we think it honors the pastor, because the pastor's called to preach and teach. And we just don't want to see anybody get into that sort of a situation. So we really do strongly encourage that you withhold taxes for your pastor, and they are your employee. Do you think we can safely say that, Jim?
Well, they are. Again, even a situation with an interim pastor for 11 months, 6 to 11 months, I would argue that they're an employee. They're still subject to the instruction and all that. But again, what you just shared there, Colleen, it's about the ministry.
Right.
The ministry isn't just the preacher in the pulpit talking to the people in the pews. The ministry is all around. The ministry as an employer, as in business, outside of the church, as business, it's all about ministry. Ministry drives everything.
That's right.
The ministry that the leadership, it's the ministry that the church as an employer has to the pastor to do that, to help them to make sure that happens. And again, if you review the slides, I think, Colleen, you're going to put these up, that'll be available. If you review them, it talks about it's not required, but by mutual agreement, it can be deducted. Again, it simply gets deducted. The self-employment tax, whatever the amount is it's being deducted, simply gets deducted as federal income tax and submitted as such. So it makes for some strange looking, if you're used to looking at a 941, simple 941s, and all the amounts for federal wages, Social Security wages, and Medicare wages are the same. It's going to look very different Church 941s look very different, but it's not hard to do. You just need to understand what's going on, and do it that way. Take care of the employees.
Right, it's important. One of the things that you were talking about, the W-9 and the W-4 and the I-9, I just wanted to make it, those are internal for us. We don't submit those to the IRS. Those are for us. Those are working documents for us to process payroll, correct?
Correct. They are internal documents, but they are required to be on file. Mm-hmm. Again, we as churches have enjoyed not exemption, but we've mostly been ignored unless there's a problem. But in the event of a problem and somebody comes knocking, it's very important to have those documents on file. Again, it's scriptural. The leadership's put in place by God, and we're to render unto God what is God and to Caesar what is Caesar's, and just do it right.
Right. Correct. The other thing that, we've seen when we go out a lot of times are really struggles that our churches have with accountable reimbursement. And that is a really big thing if there were ever an audit that could put your nonprofit status in jeopardy. So you can't just give like an amount to a pastor and say it's gas. You can't give an amount like that would be considered income, right, Jim?
Correct.
Mm-hmm. So
it's not accountable, and there's significant penalties for that. Again, the church, one of the things we enjoy is we're not subject to unemployment at this point. Mm-hmm. And we've had clients that have gotten caught with that, deeming payments as subcontractor payments when they're actually employee payments. And it's created a problem. But the IRS can come in and look at that. The state is more likely to look at something like that and say, no, this is an employee-employer relationship. If that happens, the employer, you, the church, the employer, could be, I'm not saying what's going to happen, could be subject to all the taxes that should have been paid on that money that was paid. So there are significant ramifications for not being compliant. Again, do what we're told to do it right, and life, look forward. You don't have to look over your shoulder. You don't have to remember the truth.
It's right. Yeah, that's good. That's great, Jim. I think for the dialogue, we can do, move on to your resources. That's good.
Yeah, one other thing here, I like to picture this guy here. We'll end with a sort of a comic thing. This guy has a really nice cap on there with a great visor, turned around backwards. He's struggling. He's uncomfortable. He's using his hand to shield the sun. Use the resources that are available to you. We're here at a conference level. Colleen and Frank are great resources at conference. I'm available. I'm sort of quasi still on staff at conference. I'm the assistant to Colleen and assistant to Frank to help with them. But we're available. Conference exists to serve the churches in the Eastern Regional Conference. That's what we're here for. So use the resources available to you. Let us know if you have questions. We don't have all the answers, but as a rule, we can figure out where to get the answers. The IRS stuff, Frank is a tremendous resource for things like that. Again, he doesn't have all the answers, but boy, is he great at research, and Frank will get the answer. Frank will get the answers for you. Here's my contact information. Again, if I have questions, we're here to share information. I'm as I age, and I won't commit to maturing, but as I age, one of the things I espouse is that God gives us knowledge to share. If we don't share knowledge, it's not much use. It's absolutely useless if we don't share. So we're here to share knowledge. So there's my contact information. Again, I think everybody has conference contact information. We're here to serve.
Yeah, we really appreciate you, Jim. And for those that either watch this live or later, Jim actually does our conference payroll. I used to do it for many years, and then my duties keep expanding. So Jim has, he does take care of our payroll as well, which is complicated at times. So we appreciate Jim and all that he does. And I know that he takes care of some other churches that we are aware of as well. We like referring people to Jim because we know that it's going to be done correctly. And we know that he's going to make sure that the church is protected. So feel free to reach out to him, and he can really make it a whole lot better for you. So if you're a struggling treasurer and you know you should be doing it right, and you know you want to do it right, but you're concerned about that, so please reach out to Jim. But also, Frank, is really great, like Jim said, you know, in regard to researching the IRS items. But what we also do is when a church calls and we're really not quite sure of the answer, we reach out to our CPA, and we use Smith, Elliott and Kern. And they've been a really great resource. And we like when you ask us those questions, because a lot of times there's another church coming on behind you that might have the same question. And then we can be a good resource and use $1 one time, you know, in order to help many churches. So please feel free to reach us at the conference office through email or by phone. And we are here for you. We're here to serve you. We really do believe that we are better together. And we want to help each other in this regard. So, Jim, thank you so much.
Thank you, everyone.
Really appreciate it. Hope you guys, thanks for listening, and hope you have a great day.